Today, Ether pulls back again following its slight rebound with other risk assets yesterday. Cowan of Valereum weighs in on this week's crypto sell-off. And Fred Thiel of Marathon Digital discusses how Bitcoin miners navigate through crypto and stock market volatility. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Cryptocurrencies broadly were under pressure today following yesterday's bounce from this week's big sell-off. Bitcoin was little changed as of noon Eastern and holding on to the $56,000 level. However, Ether, one of the biggest losers, was down about 4.5% at around $2,400, and Solana bucked the trend, climbing more than 1.5%. Now, crypto's current weakness is also weighing on crypto-related equities, which were also in the red today by noon. Taking a look at Bitcoin mining stocks, all were down by about 4% midday, with the exception of Core Scientific. That stock was up less than 1.5% the day after the company announced it's expanding its partnership with AI firm CoreWeave yet again. It may be a good time to buy the dip, according to Cantor Fitzgerald. The firm pointed out in a note Monday that historically, Bitcoin has very strong returns in the one-year period post-halving, which took place on April 19th. The note added that with institutional adoption only increasing and political winds shifting to be a potential tailwind from a historical headwind, the global financial services firm believes this is an opportune time to add exposure to Bitcoin ahead of what could be outsized returns over the coming year. That could be through exposure to Bitcoin miners. Cantor has overweight ratings on mining stocks including Riot, CleanSpark, and Core Scientific. We'll have more on Bitcoin miners in just a bit, but first let's take a deeper look at crypto markets. I spoke with Cowan, Group CEO of fintech firm Valereum, which specializes in tokenization for equities, bonds, and other assets, about this week's market moves. He weighs in on what could have been behind the sell-off earlier this week and what we can expect for crypto in the weeks to come. It has been an interesting week. We are in the middle of the week, and it's kind of hard to tell what is going on here. Obviously, we had this huge sell-off to start the week. Earlier this morning, stocks were, kind of rallying for a second day. Crypto, not so much though. It did get a nice bounce yesterday, but I'm seeing prices in crypto under pressure. Bitcoin itself, little changed, but ETH down 4% at one point, and a bunch of other cryptocurrencies, some solid down moves for them as well. Why is that?
I think you had a couple of reasons. I think if you look at, I guess let's just go back to the beginning of the year. And as a technical trader, I'm always looking at the past to try to predict what's going to happen in the future. And I think if you look at January, when the whole ETF thing was approved, you had this move in BTC up to about 50,000. And I always try to point people to the volumes, probably the most underutilized indicator. There was big volume. BTC basically bounced, and then the volume was huge, which to me pointed towards distribution. And then it basically went down about 20% before it really started the big leg up. And then it went from about 50 to 75 or 73,000, as you know, from Feb to March. So it was a major, major move. And then what you saw was more climactic action, so huge price moves, huge volume, and then BTC traded sideways. So it entered this range from March until actually this July, right? I was going to say this month, but early July. And then we started to see volatility pick up. And then obviously we started to really peak with last week. We saw the Bank of Japan do what they did. We also saw dropless claims. And then there's a couple of things to bear in mind. Number one, it's August. And number two, BTC, as you know, trades 7 days a week, but ETFs don't. So over the weekend, you had exacerbated volatility as BTC dropped. And what I was looking for on Monday was whether we were going to see the big funds and the big ETFs come in and start to support some of these price moves. So first of all, let's look at BTC. If you look at what happened on Monday, BTC fell to 49,000. It was exactly almost to the dollar, the same point at which it peaked in January when the ETF announcement was made. Massive volume, the highest volume that you've seen since March, and before that, November 22. What that told me was there was huge accumulation going on. And in fact, when you saw on Monday how BTC closed, it was in the upper half, so it's quite a healthy close. And that to me, when you look at BTC, you look at the selling climax in ETH, look at selling climax in Apple, Amazon, all of these things showed that this was an opportunity for the big money to accumulate. And that expression, you can't make money while everybody's interested. That was a completely apparent. So as a technical trader, you're kind of waiting for those kind of days to come along where you see dislocation, you see panic. It's August, so the moves are going to be exacerbated. And potentially what you're then looking for, is there an opportunity to basically go long? And you've seen that really since the rest of the weekend. And you're quite right. We've seen prices bounce, but ETH is still looking a little bit troubled. But BTC has definitely found huge support. And the volume again, I mean, you saw 60,000 volume on Coinbase on Monday. That's $3 billion. There was a huge amount of volume. And volume means activity. And then you've got to try and figure out, is this the smart money accumulating? Is it retail panicking? Or is there something more systemic going on? My view is, with what the anticipation is, with what the Fed is going to do, I think there's an opportunity there to basically stick on some very, very, very cool longs.
Yeah, and so, at least from, right before we started this interview, when I checked, Bitcoin definitely treading water. And like I said, solid down moves for other altcoins, but ETH, on the surface, when I looked, had the sharpest move down. And would you say that that is more technically driven, or is there kind of a idiosyncratic narrative that investors should be watching?
I don't think so. I think there was anticipation. I mean, if you look at this year, ETH kind of correlated with BTC in the up move. Then there was anticipation of an ETH ETF happening. Kind of hasn't happened yet. And I'm not sure that's going to necessarily, you're going to see the same type of approval and volatility and activity that you're going to see in ETH as we've seen this year in BTC. And I think ETH, you're just seeing this sort of mild decoupling from BTC. I don't think it's a systemic issue. I think what you did see over the weekend was gas prices shoot to $300. That, to me, potentially makes the blockchain kind of almost unusable for a little while. So I think those problems are there too. But in general, I just saw ETH as having this selling climax right down at the lows, and it's still actually in a pretty healthy position from what I can see.
So August is historically kind of a sleepy month for trading, not just for Bitcoin and ETH, but just for risk assets more broadly. We look out a few weeks in advance. So we definitely were speaking with a bunch of, investors and analysts, and that is kind of the mindset we were coming in with. Now that we have begun the month basically with this huge sell-off, what do you see playing out for the rest of the month? And, given that we're kind of starting from behind and August is, a little lethargic in terms of trading activity, do you see a full recovery for Bitcoin and Ether this month, or is it already too late for that?
I don't think it's too late, but I think it's going to be gradual. But I think there's a lot of the big asset managers. If I was on holiday, I would be getting in front of my computer and I'd be trying to figure out if I could exploit this move, because Monday was unprecedented. You saw what happened in Japan, absolute huge dislocation and a fantastic opportunity, but those volumes are still going to remain relatively low until people start sort of getting back to their desks as the summer gets behind us. And then I think what's going to happen in September and what the Fed is going to do. But obviously, if rates are coming down, it looks like they are going to come down, perhaps more quickly than people anticipate. That normally leads to another push up to compensate perhaps for the lack of liquidity that the Fed, etc., have been injecting into the market since COVID.
All right, back to Bitcoin miners for our main story. Crypto World's Talia Kaplan spoke with Fred Thiel, the chairman and CEO of Marathon Digital Holdings, about the impact of this week's Bitcoin sell-off on miners. He also weighs in on the growing trend of Bitcoin miners turning to AI as the companies have been moving into other sources of revenue post-halving.
To kick off the week, crypto markets were hit with a steep sell-off along with a sharp drop in financial markets around the world. Now, Marathon is, of course, a publicly traded company along with other Bitcoin miners like Riot and CleanSpark. So miners are certainly affected by crypto and Wall Street volatility. How do Bitcoin miners navigate past the volatility? What's your strategy?
So you can think of us a little bit the way gold miners operate or oil producers operate. The cost of our commodity in the marketplace goes up and down, but our cost to produce is driven by other factors, right? Our cost to produce Bitcoin is driven by the cost of the energy and the global hash rate, which results in the difficulty rate of what we do. And so if Bitcoin price drops, it impacts our margin, doesn't impact our costs so much. If Bitcoin price goes up, then we earn more money, obviously, and our margin expands. So when you have this type of volatility, if you look backwards, you'll see that over any kind of period of 2 years or more, Bitcoin tends to revert to mean. Like most trends do. You look at the S&P 500 index over 20 years. Yeah, it goes up, it goes down, but it reverts to mean. And the same thing happens with Bitcoin. It's just that Bitcoin's price appreciation curve is a little steeper than the S&P 500s. And so we look at the long term. And the other event we have is this halving event that happens every 4 years. The most recent one happened in April. We were well prepared for that. And now we're very focused on continuing to grow our production base, grow our number of exahash in production, expand our business. And we're also very focused on diversifying our business. And this is where our business becomes more resilient than your pure play Bitcoin miner, right? We are mining Caspa in addition to Bitcoin. Why should we mine Caspa? Well, on a per kilowatt basis, we earn more mining Caspa than we do Bitcoin. It's not to say we're going to abandon mining Bitcoin. It simply means that we found other revenue streams that generate higher margins that allow us to subsidize our cost to mine Bitcoin, subsidize our SG&A costs, and even acquire Bitcoin in the marketplace, like we did a few weeks ago when we went in the market and bought $100 million of Bitcoin at the last dip. And so we are very opportunistic. We love to accumulate Bitcoin. We now have over 20,000 Bitcoin in our treasury and continue to grow it. And while we're not as big as MicroStrategy, obviously, we have the same underlying beliefs about Bitcoin as a strategic reserve asset for treasuries for companies. And so we're very focused on that diversification play.
Now, you mentioned the halving. Revenue from crypto mining has been sinking following the Bitcoin halving in April, which caused the business of generating new tokens to become much less profitable. As a result, many Bitcoin mining firms are turning to other sources of revenue, with some retrofitting existing facilities to service AI clients. In fact, this week we learned that Bitcoin miner Core Scientific is expanding its partnership with AI firm CoreWeave once again. Core Scientific said that all told, the newly expanded deal brings the total potential revenue to nearly $7 billion over the next 12 years. You were quoted in an article last summer saying that you see blockchain and AI as having a, quote, very tight coupling over time. And here we are seeing many miners jump on this growing trend of turning to AI as a means to grow revenue. What do you think about this trend? And is Marathon Digital currently taking steps to move into AI?
So I think the trend, a couple of things about the trend. I think more recently you're starting to see people questioning, are we at the peak of the hype cycle around AI? Because like any new technology, whether it was the internet or any technology like it, there's a period of huge excitement where people start deploying the technology. And a lot of that is testing, experimentation. You look at recent studies that show that the vast majority of CEOs haven't seen a benefit of deploying generative AI yet, but they will over time. And just like all new technologies, you go through this early adoption cycle, then there's a lull, and then real commercial value is created as people figure out where does it create value. And I think we're still in that, we haven't identified how it creates value yet from a practical perspective, but people continue to build out a lot of data center capacity. We believe that in the AI space, inference AI, which is the other part of AI, one part is learning models. It's the building of these large models. The other part is inference, which is responding to the queries. When you ask ChatGPT, how should I develop content for a CNBC segment, for example, and ChatGPT responds, that's inference. That ebbs and flows, that demand ebbs and flows during the course of the day. And the problem is that AI data centers consume a lot of energy. And if their energy consumption varies, it's very hard for the utilities to give them the best possible rates. You can couple AI with a Bitcoin mining operation, and now all of a sudden you can generate a very flat load to the grid, which is exactly what the utilities want. So we are focused on working together with AI data center operators to build sites where essentially you can marry AI and Bitcoin mining in a very symbiotic way. We're also very focused on providing the technology to cool AI data centers. So we're very focused on two-phase immersion technology. We've been talking a lot about that. We're now starting to make inroads with certain partners in that area. We believe that over time, liquid immersion cooling is going to become a core part of the traditional AI data center infrastructure. And so that's how we're playing it. We don't believe Bitcoin miners should be in the business of hosting GPUs because if you look at NVIDIA's roadmap, they are upgrading their product roadmap every 6 months. You can't swap out equipment that quickly and stay very profitable. So you have to have a relationship with a company like a CoreWeave that Core does. It's a very unique marriage, CoreWeave and Core. Fully believe that CoreWeave over time will acquire Core, which would be great for Core shareholders. But I think that there are very few companies like CoreWeave who can actually build the types of data centers and operate the type of data centers together with people like Core. The vast majority of our peers in the industry really don't understand how to do AI. And I think it's much better off if you're an infrastructure provider, you partner with the people who are specialized in doing it. And what you'll see Marathon do over the balance of this year is announce projects where we're partnering with AI data center developers to really marry AI and Bitcoin mining.
Thiel also discusses Marathon's second quarter earnings report, which was released last week. You'll be able to check out more of his interview over at cnbc.com/cryptoworld. That's all for Crypto World today. We'll be back again tomorrow, and we'll see you then.